All right, the big picture is simple. This market is coiled for a major move. You've got a massive AI boom running headfirst into a political wall of worry. So let's get into the setup for the week ahead.
Okay, first thing to notice, the VIX is holding firm right around 18. Now that rebound off 16, that tells you anxiety is creeping back in. And let's be clear, traders aren't pricing in bad earnings here. This is pure political uncertainty.
And that really brings us to the core conflict, doesn't it? It's a classic tug of war. On one side, you have incredible strength at the company level, clashing with this huge macro headwind. So the real question is, which one of these forces is going to win out and dictate where we go from here?
All right, Section 1, the market's core conflict. We're talking powerful micro tailwinds facing a macro wall of worry.
So let's really dig into this. On the one hand, the micro tailwinds are just undeniable. We just wrapped a really strong and powerful earnings season. You've got these massive AI CapEx deals from Amazon and Microsoft. And we're heading into November, which is historically a bullish month. But, and this is a big but, none of that really matters if the macro picture falls apart. That government shutdown risk is the big cloud hanging over everything, keeping the VIX up. And we're starting to see some signs of speculative froth, a rising call skew in the options market. That just means people are paying up like crazy for upside calls, which can sometimes be a sign that a move is getting exhausted.
Okay, Section 2, Key Data and Catalysts. Let's map out the events that could actually break this stalemate.
So this week, the economic calendar is actually pretty light. We've got Palantir earnings on Tuesday, ISM services on Wednesday, and then consumer sentiment on Friday. Now, out of all of those, Palantir, that's the one I'm really watching. It's going to be seen as a bellwether for the whole high-growth, high-valuation AI trade. If it has a strong report and the stock reacts well, you could see that reignite some animal spirits. But if it's weak, that could be a major signal of exhaustion for the sector. And you can't forget the historical context here. I mean, look at this number. Since 1950, November has been the single best month for the stock market, period. That is a massive seasonal tailwind that you just can't ignore. The billion-dollar question, though, is whether that historical strength is enough to power through all this political noise.
All right, let's move to Section 3, Sector Focus on AI and Growth. We're going to try and identify some opportunities in infrastructure and also in valuation. Look, the AI infrastructure build-out, this is a durable, multi-year theme. This isn't just hype. We're talking about massive capital spending. You see Amazon's $38 billion deal with OpenAI, Microsoft's $10 billion contract with Iron. This is real money being deployed right now. And the most direct way to play this? It's to picks and shovels companies, the ones actually building the stuff. Think Supermicro for data centers, or Vertiv for the cooling solutions that are absolutely essential.
Now, beyond the pure AI plays, there's another theme developing, and it's in beaten-down growth stocks. This quote here really sums it up. The market appears to be pricing in overly pessimistic future growth. What that means is, for some really high-quality companies, the market is basically priced in a disaster scenario already. The sell-off's been so bad that the bar for future growth is incredibly low. And Lululemon is a perfect example of this. Just look at this chart. You can see its 5-year average PE ratio compared to where it is now. That valuation has compressed a lot. For anyone with a long-term bullish view on the company, this could represent a pretty significant discount to its historical average.
Okay, before we get into the scenarios, here's the mandatory disclaimer. This content is for educational purposes only. It's aggregated analysis from multiple public sources to help you stay informed and improve your own decision-making. Do your own research. This is not financial advice.
Section 4, 3 market scenarios. This is our if-then playbook for the shutdown catalyst. All right, let's start with the base case, which I think is the most likely scenario in the short term. It's basically a holding pattern. The market's just going to chop around, moving on every little headline that comes out of DC. You'll see the VIX stay stuck somewhere between 16 and 20. So the posture here has to be defensive. You want to be delta neutral, keep your position sizes small, and hold a good amount of cash so you're ready to act when we get a real move.
Okay, now for the bull case. The trigger here is simple. A deal gets done and a government shutdown is avoided. If that happens, that big macro overhang just vanishes. The market's focus will snap right back to strong earnings in the AI story. You should see the VIX just collapse back down towards 16. The response plan is just as simple. Deploy that cash and start adding long delta exposure as the market breaks through resistance levels.
And then there's the bear case. The trigger is a confirmed shutdown because negotiations fail. If this happens, macro fear completely takes over. Fundamentals, earnings, none of it will matter in the short term. The market will probably break key support levels, and you'll see the VIX spike up towards those recent highs around 25. The plan here is all about defense. Execute your hedges, cut your long exposure immediately, and raise cash.
Okay, Section 5. Let's talk about some risk-defined option setups. How do we actually translate these scenarios into actionable trade structures?
So here are 3 potential ideas. First, Amazon. The thesis is that durable AI spending theme, you could use a call debit spread to get risks-defined bullish exposure. The clear invalidation point? A break below its 50-day moving average. Second, an SPY hedge against the shutdown. A simple put debit spread defines your risk to the downside. If a deal gets done, that hedge is no longer needed. And finally, for a name like Lululemon, you could look at a cash-secured put. This is a way to potentially get long the stock at a lower price while taking advantage of high implied volatility. The idea is off the table, though, if their fundamental growth story really starts to break down.
All right, let's wrap this up. Section 6, the week ahead plan. It really all boils down to key levels and one single deciding factor.
So here is your focus checklist for this week. Number 1, watch the shutdown headlines above everything else. They're the primary catalyst. Number 2, watch Palantir's earnings, specifically the market's reaction. It's your best tell for AI sector sentiment. 3, track the VIX. Is it breaking below 16 or above 20? That's your signal. And finally, number 4, have your if-then scenarios ready to go. You want to be prepared to execute, not just react to the news.
Look, this market is coiling like a spring. The catalyst is crystal clear. The only question left is, will you be prepared for the break when it finally happens?
And one last time, the final disclaimer. This is not trading advice, just a market update to keep you informed. Markets carry risk, trade your plan, manage downside, and verify all data.